This edition of the Australian Investor magazine discusses how investors can navigate the heightened uncertainty that we're in. There's increased concern about the conflicts in the Middle East and Ukraine. There's the uncertainty associated with the coming US election, and the global economy is in a delicate position as well. The US is in a good position. Inflation has come down and interest rates are falling now. And growth has been quite solid this year, but the economy is slowing and the labour market's cooling. The other issue in the US is the stock market has had a very strong run. The S&P 500 is up almost 35% in the past 12 months. Valuations are elevated, and the risk is that the optimism reflected in the market proves excessive as uncertain conditions play out. In Australia, growth is more subdued, but the labour market is still tight and inflation is higher, and that means interest rates won't come down as quickly. The stock market hasn't had as much of a run as the US market. It's up a bit over 15% in the past 12 months, but some parts of the market, including the banks, retail stocks and tech stocks, have been very buoyant. And so although the risks are a bit different, they are still concerning nonetheless. Our advice to investors is to take some precautions, to have less invested in equity markets than normal, particularly international equity markets, because as interest rates come down around the world, the major currencies could be a bit weaker. And to have more in less risky investments like bonds and cash. And although investors like calm markets, sometimes the opportunity for better returns come when markets are volatile. To have the optionality to take advantage of those situations could be attractive in the period ahead.